Hello everybody, you can call me Hunch. And today we're going to be talking about the infamous rainbow chart with Bitcoin. We're going to be talking about, why I think we could actually go a lot higher, even though we have this high market capitalization of over $1 trillion for Bitcoin, right? Diminishing returns, those types of theories playing in. But I think I'm going to lay out the groundwork here for why I think we can go a lot higher. But that doesn't mean you let it get to your head. That doesn't mean you take profits when you think, so on and so forth. So what I wanted to say in regards to this is, let's just think about Stacks. If you're new here, I talk about Stacks nonstop, but it is going to play an essential part of this line of reasoning about why Bitcoin can go way higher than the diminishing returns of 2 to 3x that everyone is saying it's going to do, right? If you don't know what diminishing returns is, it's basically the higher the market cap goes, the harder it is to pump, right? But it is still such a small market, and it is a global market. So I do think that there's an opportunity to do, instead of a 2 to 3x in Bitcoin, which puts us at 150 to 180, maybe go to 250, 350, or even 500K. Now, here's the first thing, Stacks. Stacks has a game theory type of situation, just like Bitcoin, right? The first ones in tend to do better because you get to collect more Bitcoin, right? You have more stacks, you can get more liquid stacks, and then you can use that to get more Bitcoin. Now, I think this puts a lot of pressure on Bitcoin because the more you stake your stacks, the more you're using it on the smart contract layer, in the DeFi protocol, so on and so forth. It adds a layer of pressure rather than just buying it and putting it in cold storage, right? Now, you could also argue like things like runes, things like JPEGs on Bitcoin, right, or ordinals also increase buy pressure. I do think that, but I don't think it's as much as a steady state of interest of Bitcoin flowing out of miners or going back to miners or out of miners into the stakers' pockets for securing the Stacks network. I think that's a lot of pressure. Now, the second thing is obviously ETFs. I think going into 401ks, going into investment portfolios for pension funds or hedge funds or whatever the case may be is going to continue to put a lot more pressure on Bitcoin than you think, right? And then you also have the options market. Now, this one could go either way if they are creating paper Bitcoin, but even gold at 10 trillion or more is still going up, right? Even with that paper type of situation. And gold is not hard capped like Bitcoin, okay? Now, the third thing, which I think maybe could be the biggest catalyst for why we go and outperform, is using Bitcoin as collateral in traditional finance. Now, banks are not just going to up and disappear like myself used to wish as a Bitcoin maxi. They are going to use Bitcoin as collateral in the most likely scenario or outcome for the foreseeable future. Now, this can come in the form of putting up maybe an ETF or actually putting up your Bitcoin to get cash, right? Liquid cash to use to invest in capital projects, whatever a business wants to do, buy more Bitcoin, right? Like Michael Saylor, you're going to see a lot of more companies use the Bitcoin strategy. But they're also going to use it for operations. Like there's some rumors going around like Tesla will not sell its Bitcoin and will instead take out cheap debt and finance its operations, research and development, whatever the case may be. Now, this can put a lot of pressure on Bitcoin, I think, and it's probably the main component. So let's just recap. You've got the game theory and the economic theory behind Stacks, putting pressure on Bitcoin, right? Using on the smart contract layer, using it as a way to pay interest to the Stacks network if it gets more use. You've got the ETFs, right? And then you've got Bitcoin as collateral with this Bitcoin strategy, investing in your own business by taking cash out and using it as collateral, not just in traditional markets, DeFi markets. And so I think that is a recipe, along with the fact that most people think this rainbow chart or diminishing returns chart is going to remain the case. Now, could I be wrong about this? Sure. Is it a bad idea to stay conservative and just say, okay, we're going to do a 2x, we're going to do a 3x, right? Maybe. But also, I think it just solidifies the fact that you should not be overthinking this right? Stacks is a high beta play. It's been shown that it does outperformance of Bitcoin, right? And if Bitcoin is going to outperform its normal position in itself, and Stacks can obviously, with its higher risk portfolio, outperform, it has some updates coming out with Nakamoto, SBTC. You have to continue to get adoption. You have to continue to get developers, build new interesting products. But if you just go those two things, you can clearly see that you're in for maybe at least an 8 to 12x. I personally feel. I think Stacks is going to 30 a coin, but obviously not financial advice. That could be completely wrong. But that's just the way the cookie crumbles. So that's what I think. I think a lot of people are underestimating this pressure buildup in Bitcoin to go more than a 2 to 3x and possibly go to a 4 or 5x. And that's the way I'm thinking about it. That doesn't mean that's where I'm taking profits. That doesn't mean anything like that. I'm just saying that's how I'm visualizing the market. Maybe the rainbow chart breaks, so on and so forth. Anyway, you can call me Hutch. Have a great day.